Commodities here. Still sideways in the CRB index. Narrowing range, like I've mentioned before in the past. Sideways leads to a breakout either this way or that way. The little possibly inverted head and shoulders here on a daily chart. Basically, the wait and watch situation. New Zealand dollar, we got a nice move in the dollar, US dollar on Friday. And basically still stuck sideways for the last, looks like working on 2 quarters here. US dollar kind of looks like a bear flag for right now. Sideways action. Crazy as it seems, those of us that ran the market up to 2007, the dollar went cratering, and that the lower the dollar, the higher the equities. Well, okay, we're going to end up loving the stronger dollar because that'll drive imports and cheaper imports, that kind of thing. So a lot of consumption. But right now, the dollar, in my eyes, is basically sideways. Basically in a range of like 99 to 95. Marking time, but in a larger sideways pattern on the weekly. Oil, we had a poke through here, but it closed below the high. So right now, this is somewhat of a short-term reversal pattern on oil. Pivot is around 31. I'm still looking forward on the deferred months that oil continues higher seasonally, like it usually does, into Memorial Weekend. I saw gasoline under $1.50. Okay, and the Australian dollar. This was the plan on it, pullback, so if I still like it, I should like it more with a discount, right? So that's how I'm going to look at that. I still think we're going to see a continuation of bounce in commodities, with oil leading the way, and then we'll see about grains in that into late winter, early spring here. I guess we're talking a couple of weeks now. For the end of winter and spring to begin, right? And then the euro, basically, what's it, 108? Looks like the next area here. British pound was the one that got clubbed last week. Here is the yen is pulling back from its run. A lot of that had to do with the unwinding of the carry trade, and that also affected the equities and pulled back. But I think on Friday with the GDP number, everything's in autopilot, whatever Googling is autoing. That's what the stock market, I think, is going to do for the next till the recession. So the next couple 2-3 years up, and then a recession, which could be 9 months of a bear market, and then continue on again. How long was our recent just bear market, right? That was it. What do we have? May for a high, August for a swoon, another, and then a January, February, we'll say a double low, or double bottom, excuse me, or double low, however we want to look at it. Yen again. Okay, and the Swiss franc, I like the short side of the Swiss franc just due to the fact that it's overpriced. Brent crude got to 37 and changed, but came back in here. So this may be a retest of the breakout period. We shall see in a couple hours when the market opens up. Canadian dollar, same thing. I think it's going to continue higher. 74 is the minimum I think I had on it. And then the upper end is like 86. But remember, we're just finishing up February, so we still have another 10 months to go. Cocoa looks like a bear flag here. There should be some with the British pound with cocoa. And here's coffee pulling back. See about Brazil and stuff. It's their early winter there. So I don't know much. All I know is what's on the chart. But it looks like 111 to 124 is the range. Play the break.